At what income level should you switch from an LLC to an S-Corp? Is it $50,000, $80,000, $100,000? The answer can save you $10,000 or more per year in taxes. Get it wrong, and you waste money on unnecessary complexity. In the next 8 minutes, I'm giving you the exact framework to decide if and when to make the switch, including the real numbers most people get wrong. Note, this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancer's Wealth Blueprint. Let's figure out if an S-Corp is right for you. First, let's understand why this matters. As a sole proprietor or single-member LLC, you pay self-employment tax on all your business profit. That's 15.3% for Social Security and Medicare on every dollar you earn, up to $176,100 in 2026. If you make $100,000 in profit, you owe roughly $14,130 in self-employment tax on top of your income tax. An S-Corp changes this equation. Instead of paying self-employment tax on all your profit, you only pay it on your salary. The rest can be taken as distributions, which aren't subject to self-employment tax. Here's a simple example. Say $100,000 in business profit. As an S-Corp, you pay yourself a $60,000 salary. You pay the 15.3% payroll tax on that $60,000, which is $9,180. The remaining $40,000 comes out as a distribution. No self-employment tax on distributions. Your savings, roughly $6,120 per year. Now here's where people get the math wrong. An S-Corp isn't free. You have real costs that eat into those savings. Payroll service, $600 to $1,800 per year. You're required to run proper payroll, file quarterly payroll taxes, and issue W-2s. Additional tax preparation, $800 to $2,000 per year. S-Corp file a separate tax return, Form 1120-S, which is more complex than Schedule C. State fees, $100 to $800 per year depending on your state. Some states charge extra franchise taxes or fees for S-Corps. Compliance costs, time and money for maintaining proper corporate formalities. Total additional costs, typically $2,000 to $5,000 per year. So that's $6,120 savings on $100,000. After costs, you're really saving maybe $3,000 to $4,000. Still worth it at $100,000. But what about lower incomes? Here's the rule of thumb. The S-Corp election typically makes sense when your net business profit consistently exceeds $80,000 per year. Let me show you why. At $60,000 profit, if you pay yourself a $40,000 salary and take $20,000 as distributions, you save roughly $3,060 in self-employment tax. But your additional costs are $2,500 to $4,000. You're barely breaking even, or possibly losing money. At $80,000 profit, with a $50,000 salary and $30,000 in distributions, you save about $4,190 in self-employment tax. After costs, you're netting maybe $1,500 to $2,000 in real savings. Now we're talking. At $100,000 profit, the savings become meaningful. At $150,000 and above, an S-Corp becomes a no-brainer for most freelancers. But income isn't the only factor. Here's what else you need to consider. Factor 1. Income consistency. The S-Corp makes sense when your income is stable and predictable. If you had one great year at $90,000 but normally earn $50,000, don't rush to elect S-Corp status. Wait until you've had 2 or 3 years above the threshold. Factor 2. Your state's treatment of S-Corps. Some states like California charge an $800 minimum franchise tax regardless of income. New York City has an additional tax. These state-specific costs can significantly change the math. Factor 3. Your time and complexity tolerance. Running an S-Corp means payroll every pay period, quarterly payroll tax filings, an additional business tax return, and strict reasonable compensation requirements. If you hate paperwork, factor that into your decision. Factor 4, your future plans. If you're planning to hire employees soon, the S-Corp structure makes that easier. If you're thinking about bringing on partners, an S-Corp might not be the best choice. Now let's talk about the biggest trap, reasonable compensation. The IRS requires S-Corp owners to pay themselves a reasonable salary before taking distributions. You can't pay yourself $20,000 and take $80,000 in distributions on a $100,000 profit. The IRS will reclassify those distributions as wages and hit you with back taxes, penalties, and interest. What counts as reasonable? The IRS looks at what you'd pay someone else to do your job. They consider your training, experience, time commitment, and what comparable employees in your industry earn. A common guideline is that your salary should be at least 40 to 60% of your business profit, though this isn't an official IRS rule. The safest approach is to research salaries for your role on sites like Glassdoor or the Bureau of Labor Statistics and pay yourself accordingly. If the IRS reclassifies $50,000 in distributions as wages, you could owe over $10,000 in back taxes, penalties, and interest. Don't get greedy with distributions. Here's the step-by-step to make the switch. Step 1. Evaluate your numbers. Look at your last 2 to 3 years of profit. If you're consistently above $80,000, proceed. If not, wait. Step 2. Calculate your break-even point. Add up payroll service costs, additional tax prep, and state fees for your situation. Make sure your tax savings exceed these costs by a meaningful margin. Step 3. File Form 2553 with the IRS. For 2026, the deadline for existing LLCs is March 16, 2026, if you want S-Corp treatment for the entire year. New businesses have 2 months and 15 days from formation. Step 4. Set up payroll. You'll need to run payroll at least monthly, withhold income taxes and FICA, and file quarterly payroll tax returns. Step 5. Determine your reasonable salary. Research comparable positions and document your methodology. This protects you in an audit. Step 6. Work with a CPA. An S-Corp significantly increases your tax complexity. This is not DIY territory for most people. Let me give you a real scenario. Jessica is a freelance marketing consultant. Last year, she earned $95,000. This year, she's on track for $110,000. She's based in Texas, which has no state income tax. Her S-Corp decision, she pays herself a $70,000 salary based on comparable marketing manager positions in her area. The remaining $40,000 comes as distributions. Her costs, $1,200 for payroll service, $1,500 for additional tax preparation. Total, $2,700. Her savings, $6,120 in avoided self-employment tax on the $40,000 distribution, minus $2,700 in costs equals $3,820 in net annual savings. Over 10 years, that's $34,200 she keeps instead of paying in taxes. Worth the complexity. Here's when not to make the switch. Don't switch if your income is inconsistent and you're not confident you'll stay above $80,000. Don't switch if you're in a high-cost state and the state fees eat most of your savings. Don't switch if you value simplicity over savings. The peace of mind of a simple schedule. C might be worth $3,000 a year to you. Don't switch if you're planning to sell your business soon. S-Corps have more complicated sales structures than sole proprietorships. Here's the bottom line. The S-Corp election is one of the best tax strategies available to freelancers earning consistent profits above $80,000. The sweet spot is typically between $100,000 and $400,000 in business income, where the tax savings significantly outweigh the added costs and complexity. Below $80,000, stick with your LLC or sole proprietorship. Above $80,000 with consistent income, run the numbers and consider making the switch. The deadline for 2026 is March 16th. If you're on the fence, talk to a CPA before then. For more on how to pay yourself as a freelancer, Check out our video on S-Corp versus sole proprietor strategies. Link in the description. See you in the next one.